Okay, let's start with a question that's going to hurt. If you found a $100 bill from 1971 under your couch, would it buy you more than a fancy dinner today? Or would it barely cover your Uber Eats order? Spoiler, inflation is the ultimate party crasher.
Honestly, Ariel, my 1971 $100 bill would probably get me, what, 3 lattes and a sad muffin in the city? Maybe if I tip well, they'll throw in a napkin.
Hey everyone, I'm Ariel, your fellow figuring this out finance nerd. And yes, I have absolutely tried to use old birthday money thinking it would stretch further. Spoiler, it did not. But that's why we're here, because understanding how money, investing, and markets work is the most underrated superpower for our generation.
And I'm Ari. My claim to fame? Once lost $50 trying to day trade meme stocks before I even understood what a call option was. So, if you've ever Googled, what is leverage at 2 a.m., you're in the right place. We're not experts. We're learning, testing, and sometimes failing right alongside you.
Let's kick it off with the basics. What actually makes money valuable? Because, let's be honest, a $100 bill is just fancy paper unless we all agree it's worth something. It's basically a trust exercise with society. Like, hey, I'll give you this paper and you'll give me pizza, right?
Exactly. And it used to be even weirder. Back in the day, money was backed by gold. Real, shiny, pirate treasure gold. Now, it's fiat money, which means it's valuable because the government says so, and we all just go with it. It's like the ultimate group project.
And that trust is everything. If you handed someone a paper bill and they said, "Nah, I don't trust your government," that bill is basically monopoly money. That's why countries in crisis, like Venezuela, see their currency become almost worthless overnight. Trust breaks, and so does the value.
Which brings us to inflation. Ariel, real talk. What's scarier? Prices going up or your paycheck staying the same? Because inflation is when your money buys less and less, even if the number on your paycheck doesn't change. It's like your wallet is on a diet, but not by choice.
Oh, 100%. I once budgeted for groceries only to find out that my usual coffee was suddenly $2.50 instead of $2. Inflation is like that sneaky friend who always eats your fries, just a little at a time until you realize you have none left.
And then there's the Federal Reserve, aka the Fed, the ultimate referee in the money game. They control how much money is in the system, set interest rates, and try to keep things balanced. But they're not part of the government, which is wild. Imagine if the referee in your soccer game was picked by the players, not the coach.
And when the Fed prints more money or lowers interest rates, it's like adding more cookies to the jar. Suddenly, everyone wants a cookie. But now each one is worth a little less. And if they take cookies away, hello, deflation, people start hoarding, hoping cookies get even cheaper. It's a weird bake sale, honestly.
But here's the kicker. Inflation isn't always bad. A little bit gets people spending and investing. Too much, and it's chaos. Think Venezuela. Too little, and you get deflation, which sounds good until nobody spends and the economy just freezes. Japan's been there, and it's like economic hibernation.
And that's why the US dollar is such a big deal. It's the world's reserve currency, like the MVP of money. Countries use it for global trade. So when the dollar gets strong, it's like the popular kid at school. Everyone wants to be friends, but it can make life more expensive for everyone else.
But if your local currency is weak, it's rough. Argentina's peso crisis? People's savings lost value overnight. Suddenly, your $10 weekly snack budget buys you half a bag of chips. Not the vibe.
So how do you protect yourself? Invest in assets that hold value. Stocks, gold, real estate. If you just save cash, inflation will eat it up over time. It's like putting your sandwich in the fridge and coming back to find someone's taken a bite every day.
All right, let's talk stock market. Did you know the first stock market was basically a group of Dutch traders funding sea voyages? Fast forward, and now you can own a piece of Apple from your phone. No boat required.
And every share is a slice of a company. Buy a share, you're a tiny owner. I once bragged about owning part of Disney until I realized my one share wouldn't get me into the theme park for free.
IPOs, initial public offerings, are when companies go public. It's like a grand opening party, but instead of cake, you get the chance to invest. Big investors get first dibs, then the rest of us can buy in. Sometimes it's a gold rush. Sometimes it's not.
And stock prices? Total popularity contest. If everyone wants in, price goes up. Bad news, price drops. Remember GameStop? That was the power of hype, memes, and a lot of FOMO.
And then there's investing strategies. Long-term investing is like planting a tree. Takes patience, but it grows. Day trading? More like trying to catch falling knives. Diversifying is key. Don't put all your eggs in one meme stock basket. Trust me.
Crypto time! Digital currencies like Bitcoin and Ethereum aren't controlled by governments. Transactions are verified by networks, not banks. It's like your class inventing snack coin to trade snacks. No teachers allowed.
But beware the bubble. When prices go way beyond reality, think eraser coin mania in school. Eventually, the hype fades, value crashes, and everyone's left holding erasers nobody wants.
Personal finance moment. Spending versus saving. Wants versus needs. If you earn $20 a week, do you blow it all on snacks or save up for that concert ticket? I've definitely done both, sometimes in the same week.
And investing isn't just for rich people. Even $100 a year can grow if you invest in a company you believe in. Compound growth is real. Money making money, which then makes more money. It's like financial inception.
Okay, let's get a little nerdy. Derivatives and options. If stocks are the main course, options are the spicy side dish. They let you control a big investment with a small amount of cash. But that means risk goes up too. Leverage is like driving a sports car. Thrilling, but easy to crash if you don't know what you're doing.
A derivative is just a contract whose value comes from something else, like stocks, bonds, or even commodities. Options give you the right, but not the obligation, to buy or sell at a certain price. It's like reserving concert tickets. You pay a little now, decide later if you want to go.
And options have this wild hockey stick payoff. If you buy a call option, you can only lose what you paid. But if the stock soars, your profits can go way up. Heads I win big, tails I lose small. Sounds dreamy, but remember, most expire worthless if you guess wrong.
That's why strategies matter. Institutions use spreads, combining options, to cap risk, boost probability, and avoid those lottery ticket bets. Sorry, no YOLOing your way to a mansion here.
And then there's buy now, pay later, BNPL. It's like shopping with a time machine. Get it now, pay later. Sounds awesome, but if you miss a payment, interest rates go wild. Suddenly, that $50 pair of shoes costs $80, and your credit score takes a hit.
BNPL is popular because it feels easy. No credit check, no stress. But it's a slippery slope. Miss one payment and you're in a debt cycle. It's like eating dessert before dinner. Fun now, but you might regret it later.
All right, let's get practical. If you want to beat inflation and build wealth, start by tracking your spending. Budget, save, and invest, even if it's just a little. Diversify. Don't chase hype. And always read the fine print, especially with BNPL or credit cards.
And here's a tip. Automate your investments. Set up a monthly transfer to an ETF or index fund. You'll barely notice the money leaving, but you'll definitely notice it growing. And if you're tempted by meme coins or hot tips, pause, breathe, and maybe call your financially savvy friend first.
All right, pop quiz time. Don't worry, we won't grade you. Much. If you had $100 to invest right now, would you pick stocks, real estate, crypto, or keep it in cash?
This one got me thinking. If you're listening, pause and actually think about it. What would you do and why?
Seriously, pause it. We'll just be here awkwardly waiting.
Okay, welcome back. Honestly, my first instinct used to be all in on crypto. But now, I'd split it. Some in stocks, maybe a little in crypto, and a bit in cash for flexibility. Diversification, baby.
If you said stocks, awesome. If you picked real estate, also smart. Though $100 won't buy you a house, but it could go into a REIT. Crypto? High risk, high reward. Just be careful. And if you said cash, well, at least you're safe from volatility, but inflation's going to nibble at it.
If you forget everything else, just remember this. Finance isn't about getting rich quick. It's about making smart, consistent choices, learning as you go, and protecting your future self from your present self's bad decisions.
Okay, you know what time it is. Life lesson of the week.
All right, here's mine. This week, I almost bought a new phone on impulse. BNPL was right there, one click away. But I stopped, did the math, and realized I'd pay way more in interest if I missed a payment. So, I waited. Turns out, my old phone just needed a restart. Lesson: don't let buy now, pay later become regret now, pay forever.
That hit me, honestly. My story? I tried options trading for the first time, thinking I'd double my money overnight. Spoiler, I lost my premium, but learned more from that $20 loss than from any YouTube video. Sometimes, the best teacher is the market itself, and the tuition is real.
All right, before we let you go, vocab check. Don't worry, this is the fun part.
Inflation, when prices rise and your money buys less. Think, coffee goes from $2 to $2.50, but your paycheck stays the same.
Stock, a slice of ownership in a company. Buy a share and you're a tiny boss. Just don't expect an invite to the boardroom.
Option, a contract that lets you buy or sell an asset at a set price by a set date. Like reserving a concert ticket. Pay a little now, decide later if you want to go.
Leverage, controlling a big investment with a small amount of cash. It's the financial version of using a tiny lever to lift something huge. Just don't pull too hard.
BNPL, buy now, pay later. Get it now, pay over time. Sounds cool, but the interest monster is lurking if you're late.
ETF, exchange traded fund. It's like a basket of stocks you can buy with one click. Diversification in a box.
And fiat money, currency not backed by gold or silver, just trust in the government. It's the ultimate group project, remember?
Seriously, thank you for hanging with us. Drop a comment, subscribe, and tell us your life lesson of the week. And remember, finance is a journey. Let's get smarter together.